We just had Jim Cramer tweeting out a few moments ago that the fine was basically a library fee. In other words, sort of intimating that the legal woes are not that big of a monetary concern for Facebook. The market obviously agrees. The stock is up 8%. What do you think?
I agree with Jim, Brian, and I'll give you a different analytic way to look at it. The company makes in the neighborhood of $27 billion operating cash flow. And the $5 billion, if you take that out of the cash that the company has, which is still very ample, well in excess, I believe, of $30 billion, and just assume that that cash is going to earn 2%, the certainty return of cash, the short-term interest rate. That's basically that cash would have earned $100 million or so in pre-tax interest income. So you lose $100 million, you still got $27 billion left. So the net cost of the company is less than half of 1%. And the really important thing here is that it doesn't necessitate, at least as far as I can see, any significant behavioral change other than what the company has attempted to do voluntarily to improve the privacy of the users. And I think the company has been very responsible in trying to quote unquote fix the platform. So the $5 billion sounds big until you put it into that context. And I think here both Jim and the market really got it right. As long as there aren't behavioral changes, and this is a one-off, we can go on and just look at the business, and the business looks pretty good. I'm amazed for a company this size, the ad volumes before adjusting for FX headwinds were over 30%. The unit usage was over 30%. That's really pretty remarkable. It's growing probably 7 or 8 times faster than the ad market. And of course, advertising doesn't have any cost of goods sold. All the company's doing is delivering bits. The advertisers obviously don't care about
they don't.
What's
But
going on
Larry,
here.
why not? I mean, we got Zuckerberg in front of Congress a year ago. They've gone on a global apology tour. You got this sort of, maybe it's a fake delete Facebook movement. They're under pressure from the UK. Europe is coming down with the new privacy rules. But nobody, not the users and not the advertisers, seem to give a you-know-what.
Yeah, well, I again totally agree with you, Brian, and you have to go back to David Ogilvy. The problem with advertising is 50% of it works, and we don't know what that 50% is. And the thing with Facebook, it was really my first learning from the company. There were businesses when it started that were called Facebook facilitators. It was a whole sub-industry, and it taught people how to work with Facebook. And the thing that worked from the get-go was that they could identify whether the advertising worked. There were some just amazing microeconomic situations. I saw it with Walmart, and the efficacy of the advertising from the point of view of the advertiser is terrific. So the advertiser knows he or she is getting a return on investment, and it's the same with Google. You can tell whether the search works, and as a consequence, these guys continue to grow 6, 7, 8 times faster than the ad market. They generate mountains of free cash flow. The valuations still are on the reasonable side. Facebook is not as cheap as it was, but it's not enough to get me very exercised here. So I think and we'll see Google later on this month, I think the lights are pretty green there still, as strange as it may seem. But in Facebook's case, the efficacy of the advertising is the real story, and that's not going away.
But you're not buying more of the stock, Larry.
I think I want to watch it here. I think personally that Apple and Google are more attractive among the FANGs, and there's a lot of bargains outside of the technology industry that don't get discussed that much. But the FANGs are up there, and I've never really been at all positive on Netflix or Amazon, and I'm still skeptical about both of those. Okay. So my incremental money would be on Google and Apple here, and Facebook would be third.